Hello guys, it's Max here from Daily Market Movements, and in front of me we have the Nasdaq 100 futures chart. Return of the yo-yo markets. Friday we saw a 2% movement towards the downside, and then to close out Friday, to close out that awful week of trading, we actually ended up 2% higher. So, I think you can understand why I call it yo-yo markets. And then the same again in today's trading session. Pre-market we were as low as 2%, but then we had some positive comments from some top traders on Wall Street saying that they actually like the market right now. They think this is a fantastic buying opportunity, and sure enough, Wall Street reversed its losses and the Nasdaq 100 was briefly trading in the green. We have paired those gains ever so slightly. We currently find ourselves trading down roughly 0.5%, which isn't too bad considering the fact that we were down 2% pre-market. Currently find ourselves trading at 12,579. What I like, guys, is that we are holding roughly at 12,500. Yes, we did briefly deep below there last Friday. We went down as low as 12,300, but since then we have paired those losses, and as I just mentioned, we're trading above 12,500, and this is an area where I do expect to hold. We've seen lots of resistance in previous trading sessions dating back to 2020. So this could be an area where, we start to see the buyers hop back in and buy back up. If we were to break below here, which is possible, although I like the fact but the Nasdaq is holding at 12,500. It is very possible, guys, that we could break down lower. And if we do break down lower, look for a movement down to 12,000. And then I think that we would probably go in touch with 200-day EMA at roughly 11,800. That would make sense. I think it's very unlikely we'd go all the way to 12,000 and not come into contact with the 200-day EMA. I think if we break down from 12,500, we will go the whole way to the 200-day EMA. So, this downside movement isn't over yet. However, that being said, I am starting to see plenty of signals that are telling me that this market is starting to bottom. So, I'm not saying that it's going to go up from tomorrow onwards. We may still see some choppiness, especially this week. But, going into next week and the week after, I think that we are starting to show signs that this market is starting to bottom. Now, let me run you through those signs. First of all, we've had some key traders come out and say that this is actually a fantastic buying opportunity. You didn't see anyone come out last week or the week before when we were down 5%. They waited for that 10% correction area. And historically speaking, the Nasdaq 100 does do very well and bounces off the 10% correction mark, and of course we're currently down 10% from the highs up at 13,900. So very, very encouraging to see some top hedge fund managers, some top traders come out and say this is a fantastic buying opportunity. As well as that, we have the RSI. RSI is down near 30. Very, very rare for the Nasdaq 100 to have an RSI down near 30. Last time that occurred was back in March 2020 when, of course, we had that huge sell-off in the Nasdaq 100. But one of the key signals that's telling me that this market is starting to bottom is because on Friday, yes, we were trading down 2%, but then when we reversed those losses to actually end the day 2% up, that was the first time since this massive sell-off occurred 3 weeks ago that the Nasdaq 100 has ended the day in the positive, and so have the yields. We had the yield curve up rather significantly on Friday. It went above 1.6, but then we also had the Nasdaq up 2%, which is great gains as well. So that's the very, very first time, and that tells me that traders are starting to shrug off the yields. So that could be very, very encouraging and something that you should look out for throughout the week. So the signs are there. The market is starting to bottom. And right now, yes, I have lost, a rather significant amount of my portfolio over the past couple of weeks. I'm not going to lie. But I am very, very, very encouraged with the markets right now because there is an incredible amount of value out there. You have some of the top stocks, okay? And this is one thing that traders really struggle to understand, that bull markets do pull back. Yes, they do have 10% corrections and it can be scary sometimes, but you just need to stick with your trades, guys, okay? Because even the best stocks pull back. And when I say the best stocks, I mean the Apple, I mean the Amazons, the Teslas, these stocks no doubt will be trading back at all-time highs, probably before the end of this year, maybe even sooner, hopefully sooner. But, even the top stocks do pull back. Hedge funds, portfolio managers, they do need to trim their positions. They like to take profits so that they can show their clients how well they're doing with their money, hoping that that client will then invest more or perhaps go to a friend and recommend them for business. So, It's perfectly normal that even the best stocks do pull back. I'm extremely bullish. As I mentioned last week, Warren Buffett even mentioned it last weekend. Never bet against America, and he is so right when saying that. This is a fantastic buying opportunity. As I just mentioned, some of the top stocks, some of the top stocks out there, the likes of Amazon, Apple, Nvidia, Tesla, AMD, Neo. Some of these fantastic stocks have got a significant amount of value right now, which you can take advantage of. So yes, I'm sure many of you have been hurt in the recent weeks, but right now you'll see many retail traders just give up and think, oh, the stock market's fixed, the stock market's this, the stock market's that. But right now is actually the perfect time to not give up, okay? Because there is a fantastic money-making opportunity on the horizon. When we get the bounce here from this 10% correction mark, we will probably trade rather rapidly up towards 14,000, especially whilst money's cheap. Interest rates are still at an all-time low, so there's cheap money out there, guys. The Fed is still continuing to support the markets, so I do see a very good bounce from this mark. In fact, I am anticipating an extremely bullish market, especially for tech. A lot of people are saying that there's going to be a massive economic boom, which I completely agree with, but at the same time we've become more digital in everything that we do. And some people are saying that Zoom's just going to completely disappear now that the economy's back open, now that people in the workspace can go and visit their clients face to face. But I think they're very, very wrong. I think we've changed the way that we do most things. Are work colleagues still going to go meet up face to face? Are they still going to go to an office? Yes, of course they are. But there's going to be times as well when they're going to prefer to use the likes of Zoom, for example. So that being said, I really think that a lot of traders out there are, mistaking how important and how much digital, the digital aspects of our life will have a huge effect on the way that we work, and even in our social. Even when we are social with our friends and family, the effect that technology is going to have going forward. So I am extremely bullish, especially on tech stocks. Nasdaq 100 futures, this is a gift, okay? Christmas has come early for 2021. I would be a buyer all over this area here, but I'm just still waiting for a couple of trading sessions where we can find some where we can show signs that we're starting to stabilize. So I'm going to wait for 2 or 3 trading sessions in a row where we finish the day in a green or roughly around the same area. It looks to me that 12,500 is starting to hold, which is fantastic. We're now at 12,632 as I speak, so we're starting to pair our losses already. But hopefully, going into midweek, perhaps the end of this week, I can really start to put a significant amount of money to work and trade it back up towards the all-time high. So I'm very, very bullish here in Nasdaq 100. No interest in selling. I just simply want to buy the dips.